This video is going to be all about taxes. 31st March is your last day for your financial year, after which you need to file your taxes before 31st July. But before 31st March comes, there are a few things that you need to do to make sure that you're saving as much money as possible. I have Ritik Jain here, who is one of those rare people who has been able to clear their CA in their first attempt. Him having cleared his CA in his first attempt, he is here right now to explain to us and break it down specifically as to what you need to do to plan your finances properly so that you're ready to file your taxes. Another video will be coming out after 31st March where we will be taking you through a step-by-step of how to file your taxes. So before we jump into anything, the main question to answer here is that should we file our taxes? For example, when I started, I had income which was less than 2.5, which was less than 5 lakhs, right? As far as I understood, I didn't have any tax liability. So there was no pressure on me to file taxes. No one was telling me to file taxes, except my dad at the end of it was like, please just do it, right? That's when I did it. But just tell people, why should people file their taxes? Why is it important? When should they file their taxes?
Right. So the ideal thing is a lot of people who don't exceed the said limit of 2,50,000 or 5 lakh respectively don't file their returns only because they don't have to pay any taxes. But the benefit of filing taxes even when you actually don't have any tax liability which is to be paid would be, ideally if there are any TDS which have been deducted regarding your said income so that you can claim that. There could be any visa applications which you would be applying for or any loans which you will be applying for. Likewise, the biggest benefit is that if there are any losses in the current year which you can carry forward in the further years, that can also be done only if you file your returns on time. So these are a few benefits out of it.
Got it. Can you just give them an explanation of what is TDS?
Okay, TDS is basically tax deducted at source, which is the abbreviation out of it. It ideally means that a few incomes which by the department should be deducted, a percentage of it is deducted so that the government can have a track of it, and likewise it also acts as an in advance payment for your taxes.
So even if you're not filing your taxes, the government is already getting money from you.
Correct. That's right. That's right.
The government is anyway getting money from you through your company.
Correct.
What you end up doing is when you file your taxes and you don't have to pay any taxes, you get that TDS as a lump sum amount into your bank account.
Correct.
Right? So that's another advantage of filing taxes. And the most important thing here is to remember that if your income is more than 2.5 lakhs, you have to file your taxes, otherwise it can be considered as tax evasion, correct?
Correct. That's right. That's right. Completely right.
Right? So if your income is more than 2.5 lakhs, please file your taxes and just follow what we are going to be talking about. Just go through everything that we're going to be talking about just to get an understanding of how to do it. Okay, cool. So how to go about filing your returns? What is the portal that we need to do? I mean, what that we need to use? Are there any other tools that people can use to file their taxes? Please.
Right. So there are many tools, to be honest. You can use Winman, which a lot of corporates use. Likewise, ClearTax is also a good base for you to file your returns. But to be honest, you can also file your returns through the portal too, which is your income tax portal. And it is very simple for all the people who have very less amount of income or hardly 1 or 2 sources of income. So that will also act as a good base.
Just give them an idea of, say for example, if they use any of these tools that you mentioned 2 tools, right?
Correct. That's
ClearTax and
Winman.
If either of them, do either of them charge anything in terms of?
They would definitely charge. Winman charges, and likewise even ClearTax is a website through which you definitely have to pay the charges which for filing of your return. That's definitely there.
Got it. Awesome. So now coming to tax planning. Give the audience an understanding of what is it that why do we need to plan the tax filing?
Okay. So a lot of people, we always concentrate on just the income part of it. They might all our intentions are to make as much more money as we can, but nobody actually plans the taxes which would fall on you at the end of the day. So the basic or the rich is better because they plan their taxes throughout the year because they know what incomes they have throughout the year. And tax planning will help you in certain way. It's not that a lot of people, they pay huge amount of taxes. The only problem is that they don't plan it. Plan it forehand ideally. So by planning, you can save your taxes as much as possible, or maybe you can mitigate them in such a way that you don't have to pay your taxes at all.
So Elon Musk was a great example of this, and even Jeff Bezos, that's been a great example of it. If you look at the Indian side of it itself, right? Actually, could you give them an understanding of a lot of these rich business people?
Right.
They established something called as an HUF,
Right. That's right.
Can you give them an example of what is just this I'm talking about? It's not going to be very relevant for you, but I want you to understand how rich people are doing it and what they do to sort of save taxes.
True. Okay. HUF ideally means Hindu undivided family. So it just means that you create another assessee or another individual through which you can push your income to their head. If you create a HUF in your family, you can also push the said income so that they get that benefit of 2,50,000. This is on a very minimal term. Likewise, in the long run, you can actually save your taxes in a very proper way. HUF is one of the ways by which you can actually plan out your income.
And there are several other ways, but I just wanted to tell you about it so that you also understand the depth to which people plan their taxes to make sure that they're not paying too much.
That's right.
Awesome. That was about everything basics about tax planning and why you need to do it. So now we are going to be walking you through an Excel sheet, right? Which he is very generously curated. We will link it as well in the description. You can also use it. We'll walk you through how you can use that Excel sheet to plan your taxes. And more importantly, there are two tax regimes, old tax regime and new tax regime. So people are very confused about which tax regime to use. This Excel sheet will help you understand which is more beneficial for you, which will help you save more taxes. Note that in the budget which was announced in February, they have changed the tax slabs a little bit, right? They are going to be pushing the new tax slab a lot more. But this only comes into the picture for the 23-24 financial year. Right? So right now the taxes that you will be filing is going to be through the old tax regime itself, which is what this Excel sheet caters to. Right? When the new year comes in, when again next year we'll make another video explaining everything all together. But this is going to be all about how you have to file your taxes right now. Okay, so now we are going to be running through the Excel sheet. Ritik, please.
Right. So the first thing which you guys have to know is there are 5 heads of income. First one is being salary, which you can see here. Second, your house property, income from house property, which is basically your rental income which you get. Third one is profit and gains from business or profession. It is ideally you run a business or you're earning some professional income.
So this will also count as freelancing projects?
Correct. Yes. It would.
That won't come under a salary?
Correct. It wouldn't.
Okay.
Right. And right after that, there is capital gains. It is ideally the profits or the gains which you make out of your investments. It could be your shares, your debentures, your bonds, etc. And right after that, the last one is income from other sources. Income from other sources is more like a miscellaneous head, wherein you would tax anything which wouldn't fall under your first 4 heads.
Can you give an example?
Right. The first being any interest which you get from a savings bank account or an FD income, likewise. So
when it comes to capital gains, capital gains is only from stocks, is it?
Capital gains is ideally from stocks, debentures, or sale of land or a property.
So income from house property is only rent.
Right. It is more or only rent.
And if you sell a property, if you sell a house, it comes under as capital gains.
Correct. So a basic tip which I can give you guys under capital gains is that every stock or every mutual fund which is equity oriented will be taxed at the rate of 10% if it is held for more than 12 months. 12 months indicates that you have been holding that for more than a year, and likewise which is a long-term capital asset. Likewise, and the other benefit is, or the other thing which we can touch upon is under profits and gains from business or profession. There are 2 sections wherein for businesses who have income less than 2 crores, they can pay an idle tax of 6% or 8% respectively. So there is a direct rate of 6% or an 8%. And likewise for professionals, you can get a direct deduction of 50% directly under section 44 ADA, which is also very beneficial for people who get, for example, getting an income of 25 lakhs. Due to which, if you claim that said exemption, you'll be getting a direct exemption of 50% of it.
This is under business or profession?
That is right. That's right.
Okay.
So yeah, so these are a few things which we have covered, and likewise under income from other sources, dividends are also taxed on the same head.
So in this Excel sheet, he has basically put together certain examples of what falls under what criteria.
Correct.
Right. So if you go up, you can see that on income under other sources, he's given examples, right? Savings bank account, interest from fixed deposit, dividends, right? Under capital gain, you can see long-term capital gains, short-term capital gains, right? Short-term capital gains on sale of land. So he's broken it down to a very minute level. This is more for you to also understand the different criterias and how to segregate each of them.
Right. So right after that, this is your income part. When after the total of your 5 heads, it is called as your total income or total taxable income. out of which you can claim a certain deductions which you guys are very popular or you guys would have heard, like under section 80C or 80D or 80G. Likewise, 80C is basically you get a limit of or a cap of 1,50,000, wherein if you invest in either life insurance policies or you have any PPF account, PPF or EPF accounts, the max amount which or the max deduction which you can get out of this is 1,50,000. Likewise, the other ways through which, for example, 80TTA, which is on screen. 80TTA is basically wherein you get any savings interest or savings bank ka interest. To a limit of 10,000 will be exempt. You don't have to pay any taxes on it. Likewise, except that there is 80G, which is for deductions wherein you can claim when you make donations to any trusts or any reputed organizations.
So, okay, so let's run through it again.
Okay.
Okay, 80C is basically where you can get exemption
Of 1,50,000.
of 1,50,000.
50, that's right. Through ways of life insurance policies or PPF accounts or EPF accounts.
PPF, EPF, is it are those created by employers?
Okay, EPF is done by employers. It is basically the organization where you work. You will be getting your EPF. PPF is for anybody, like people who don't who aren't even employed. They can open their PPF account.
So if a person says earning 5 lakhs in a year,
That's right.
and out of that 50,000 is going to EPF.
Correct.
So that 50,000 can be considered as a deduction.
That's right. So his net taxable income would be 4,50,000 after 5 lakh minus 50,000.
So guys, check with your employer if they have created an EPF account for you. Check your salary slip, you'll get all the details there.
That's right.
What about just a PF account?
Okay, a PF account, there isn't something called as just a PF account. It is ideally PPF or EPF.
Okay.
So public provident fund or employers provident.
And most of the established MNCs or established startups have a EPF or a PPF program.
Correct.
Most likely you will have some sort of deduction. Okay. So yeah. So in the first table you are able to understand what's your taxable income. Now let's go into deductions.
Correct. So yeah, the main ones being 80C, which you guys already know, wherein you can claim for under PPF or EPF or LIC insurance policies. Likewise, after that there's 80TTA, which is just which has a cap of 10,000. If you have any savings bank interest under 10,000, you'll get a total exemption. Right after that, there's 80G for an individual, wherein if you make any donations to a reputed organization or a reputed trust, so you would get that complete deduction. After that, there's also 80D, which includes your medical insurance. If you take any Mediclaims, so you can get a max deduction of 50,000 there.
So if someone has health insurance,
Right.
and they have some sort of, say, medical emergency, and
Correct.
they claim the insurance.
Correct.
Does that also be considered as a deduction or no?
Okay, so the deduction part is wherein you pay the premium of that said medical claim.
Okay.
So when you make that premium pay or when you pay the said premium, that's when you can claim that as a deduction.
Got it. And there is a limit of 2 lakhs is what the maximum to maximum deductions that can be taken. Is that correct or
Yeah,
not?
that is under 80C, but under any other head, you can actually take more than that. So
Okay.
it's not very much restricted to just one head. There are so many other deductions through which you can actually increase your deduction.
Okay, so 80C right now it says 1.5 lakhs. So
Correct,
does the
correct.
extra 50K come?
Correct. So there is something called as 80CCC. So under which you can also claim the additional 50,000.
And what is 80CCC?
So it includes NPS. NPS is also, it's called as National Pension Scheme. So under which you can make a maximum of 50,000 and you can claim that. So right after that, if there are any TDS which have already been deducted by your employer or any other source of income, here 194 includes any deductions which has been taken on dividends or any TDS which is done on dividends. 194A is on FDs. Basically, if you have any income or any interest from fixed deposits, it is under 194A. 194K is any income which you have received from a mutual fund. IA is wherein you have any rental income. So that is your total deductions. Right after that, if you have paid any...
So when you're getting paid through mutual funds or FD,
Correct.
they still cut a TDS.
Correct, they do.
Okay.
So right after that, if you have paid any advance taxes which is applicable to you or any self-assessment tax, self-assessment is basically that once at the end of the year, if you have estimated what is your total income and likewise you have claimed all your deductions and all of it, what is the total tax which is yet to be paid? So that is called as your self-assessment tax which is to be paid. On which, if you don't pay your taxes within your time, then there are something called as which is interest, which will be added under section 234 ABC.
Okay. So now under TDS, how do people check how much TDS? Because again, not people can't keep track of TDS.
Correct.
Right?
That is right. That is right. So what people can actually do is when people file their taxes, they do it through their portal, right? The income tax portal. So on the income tax portal, there's something called as forms, wherein you can find your 26As. 26As is a form wherein the people who have actually deducted your TDS on the said income will be reflected there. So, for example, I am working at a said A organization. The A organization will show the total income which has been received by me and the TDS which has been deducted on it.
So there is something called as a Form 16A, which is
Correct.
to be given to employees. Just give a little explanation of that as well.
Okay, so Form 16A is basically wherein you have any income under Section 192, basically which is your salary. So under which once the said tax has been deducted on it, you will be issued the said form of 16A. So on that you can get to know what is your actual salary which has been received and likewise the TDS which has been deducted on it.
Got it. Awesome. So I think that's about it for
The computation part of it.
of it. Now this computation is relevant for
The financial year 22-23. We aren't considering anything for the next financial year regarding the budget which has come recently. So this is only about the financial year 22-23, wherein the date on which you have to file is 31st of July, the last date basically.
Got it. Now old versus new regime.
Correct.
So now this particular table that is shown, this will help you, the first table will help you understand what is your taxable income.
That's right.
Right?
That's right.
These deductions that you have put are only applicable under the old regime.
That is right. That is completely right.
Correct. So what you can now do is that once you calculate using this first table your total taxable income, you can use this old versus new table here, which also we will include in the Excel sheet, to understand how much tax will be applicable for you under the old regime versus the new regime. Right. So again, Ritik has been very generous in establishing this whole Excel sheet in a very nice manner. So please give them a run through of this whole.
So basically, there are you have that option of getting into the new scheme or the old one. New scheme is under the section 115 BAC, wherein you would be getting a benefit of 5% on every 250,000. So I'll tell you just a brief about how the old scheme and the new scheme is. Old scheme is wherein till the first 250,000 you don't have to pay any taxes. For the next 250,000 you have to pay a taxes or the rate at which you have to pay taxes 5%. Right after that, for the next 5 lakhs you have to pay 20%, and anything above the slab rate of 10 lakhs you have to pay at the rate of 30%.
Now, okay, everything is mentioned in the Excel sheet. You can see it on the screen as well.
Right.
I know it might be a little confusing, but all the rates are mentioned here. So these are the old rates. So this is the income,
Correct.
right? So
Correct.
0 to 2.5 lakhs is 0% tax rate.
Correct.
2.5 to 5 lakhs 5% tax rate. So like that, the breakdown is given. Same thing for the new regime as well.
Correct.
These are the rates. So if you see, you can see the clear difference, right?
Correct.
0, 5, 20, 20, 30,
Right.
30, 30.
So in the new regime, it is ideally that you can see as a start, the 250,000 is not taxable. The next 250,000 is taxable at the same of 5%. But right then there is a slab cut which is 5 lakh to 7 lakh 50, wherein for these 250,000 you have to pay at the rate of 10%, and further the 250,000 it will be increasing by 5%.
So if your income say is 12 lakhs, right? Till 10 lakhs it remains the same.
Correct.
Between 10 lakhs to 12.5 lakhs, you have, instead of 2.5 lakhs, you have to do it on 2 lakhs because your total income is 12 lakhs.
The benefit of the old scheme is that you can claim your deductions which we already spoke, which is under section 80C or 80TTA or 80G. Likewise, but if you come to the new scheme, you can't take any of these deductions. So that is the benefit out of it.
So that's why this calculator is important, because depending on your income, it is ideal for you to understand should you be taking deductions or no. Very, very important question. Now as we move to the new financial year, the government is promoting everyone to use the new regime more than the old regime. And the reason for that, as far as I understand, Ritik, please correct me here.
Right.
The reason government wants you to use the new regime is because the bigger economies that you look at, they have their tax regime without deductions. Right? It makes it simpler to file taxes, it makes it easier for the computation of taxes, and it is less likely that people are able to take advantage of these deductions.
Correct.
Right? So that way people say the government is able to make more money. Is it right?
That is right. That is completely right. So, and just to add on to it, the benefit is that with the new regime coming into picture, the amount or the base amount on which you don't have to pay taxes at all is also increasing in the new budget, which is to 7 lakhs. So that will also help you out in a good way.
Correct. So see, Bill, once the new regime kicks in, 3 lakhs is where you, so if you have income less than 3 lakhs, you don't have to pay taxes.
That's right.
Right? But if your income is more than 3 lakhs, you have to file your taxes, but you still don't have to pay any tax until you touch 7 lakhs. Okay. That means that you'll file your taxes, you will get your TDS, and you will have zero taxes to pay to the government.
Correct. That's right.
Correct?
So yeah, so we have just done a minute calculation.
So just to make it simple for you, there is a table. This is the table which is basically going to help us understand which regime is going to be better for you, old regime or the new regime. Again, remember that this is only for financial year 22-23. 23-24 it has changed. We will have a new video coming out later on next year. We don't have to worry about it right now, and we'll explain that as well. But for now, let's worry about what you have to do this financial year. So we're going to break it down like this. We have taken a total taxable income of 8 lakh rupees, right? Under which we have assumed that the person that is filing the taxes has perfectly used ATC to take all their deductions and has reduced their total taxable income to 6.5 lakhs. Okay. Now remember that these deductions are only applicable under the old regime, right? So this here that you see is the old regime chart. Correct.
That's right.
You can see it here as well. We'll share this, a better version of this, but we're just showing it to you rough here, right? So now 6.5 lakh will be broken under each category, right? So 6.5 lakh of first initial 0 to 2.5 lakh, which is 0%. So the total tax will be 0. Correct.
For the next 2 lakh 50 to 5 is taken at the rate of 5%, which will be 12,500.
So इसमें 2.5 lakh minus 2.5 lakh, which is 2.5 lakh again.
Correct.
उसका 5% will be 12,500.
That is right. And
correct.
As we are considering only 6 lakh 50, so above 5 lakhs it's only 1 lakh 50. So on that will be at the rate of 20%. 1 lakh 50 into 20%, which comes up to 30,000. Right.
Got it. So you're basically, as you're going down the chart, you're breaking down your income, and because your income is only 6.5 lakhs that is to be taxed, you're under the last category, which is 5 lakh to 10 lakh, which is 20%, only 1.5 lakh comes, right? And under 10 to 12 lakh, of 12.5 lakh, of course, it will be 0 because you don't have any income under it.
Correct.
Right? So your total taxable income here is basically 30,000 plus 12,500, which is 42,500.
Correct.
Now this is your new regime. I mean old regime, sorry.
So now coming to the new regime, the first, as you can see above 2, the first 2 lakh 50 will not be taxed. The next 2 lakh 50 will be taxed at the rate of 5% again. Right? And the next is 5%. Again, here there is a further breakdown wherein 5 lakh to 7 lakh 50 will be taxable at the rate of 10%.
Got it.
7 lakh 50. Right. And the last of 7 lakh 50 to 10 lakhs will be taxable at the rate of 15%. Right. Okay. So now considering...
Then after the 10 lakhs also just give me...
Correct. 10 lakhs to 12 lakh 50 will be at 20%. Then the next 12 lakh 50 to 15 is further on. Right?
Got it. So here, now you don't have any deductions under the new regime. Got it? So your total taxable income will not be 6.5 lakhs, it will be 8 lakhs.
Correct. That's right.
Correct.
Right. So now taking 8 lakhs, the first 2 lakh 50 would not be taxable, so that is 0. The next 2 lakh 50 again it's at 5%, which will be 12,500. Right? And the next 2 lakh 50 would be at the rate of 10%, which comes up to 25,000. And right after that, we just have a remaining of 50,000
rupees.
So
your income is 8 lakh. Between 7.5 lakhs to 10 lakh, you have only 50,000 extra income, which is taxable now.
Correct. That's right. So 50,000 into 15%.
Which will be 7,500.
7,500.
Correct. So now when you add it up,
45.
Okay. So your income here is 45,000. I mean your taxable tax that you have to pay, tax liability is 45,000. So based on this calculation, we have understood that old regime will be better than the new regime for you, which is if you have taken 1.5 lakhs ka deduction. If you wouldn't have taken the 1.5 lakh deduction, then your tax would be higher under the old regime, which would make sense for you to use the new regime.
Correct. And this is the taxable amount. On this, there's something called as a cess, which is also added of 4%. So that is also included.
Now cess is automatically added.
Correct. So on the base of 42,500 or 45,000 respectively, you'll be adding a 4% of cess.
All of this you need to sort of understand and be ready with before 31st March. So before 31st March, if you are liable for any such deductions, take it. Right? How can they take the deductions now? Right. So consider that they have only 2 to 3 to 4 days left to file their taxes.
Correct.
To finish their financial.
Right. So you still have about a week or so that you can claim your deductions, or if you're falling under the old regime, then you can also apply for your ATC deductions. You can claim the whole of 150. It's not too late for us.
What can they do to?
You can invest in any PPF accounts or create a LIC policy too. As of now, EPF would anyways be considered. Likewise. So except that, you can also claim a medical insurance also under ATD. That will also help you about 50,000. And also you can make some donations also, which can also help you out regarding the said week. So yeah.
So that was all about understanding which regime to use. So based on your income, understand which regime would be better for you, and you have a few days to make sure that you're getting enough deductions under the old regime if you feel like you can get more tax exemption.
Correct. That's right.
Awesome. So this was all about planning your finances before filing your taxes. Again, remember, we will be creating another video to show you step by step, so you can subscribe to the channel to stay updated on that. It will probably come out in the first or second week of April.